All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. As you can probably tell, my voice is still trying to come back here a little bit, getting a little bit better, but still not back to what it was. But here we are with the market on its chase to a new high. I believe it's about 2% away, and looks like it's going to print it. It absolutely looks like, with the action we saw Monday, breakout action, and that action not failing, it does look like we are going to print a new high here on the SPY. It'll be really interesting to see if we see small caps print a new high as well, but you can see how far small caps are from their highs back in August, which is some pretty negative divergence here, but that is absolutely being swept away by the market. Market doesn't really care at the moment about things like that. It will be one of those where if there's a big down leg, everyone's going to go and point and say, see, yeah, of course, we are going to have down leg because small caps lag big, and it'll be one of those things. But, right now that's not the case. That's not what's materializing. And in fact, last night we saw S&P futures jump. And they jumped on what? Well, we talk about the three things, and it looks like this is the virtual account coming up. My apologies. I meant to have the live account come up, but let's see if I get the same data here. But we saw S&P futures jump on a report that the trade deal between the U.S. and China was 90% done. That it was 90% completed, that they had the last 10% to go, and that they were kind of working their way through that. And so we saw a jump in S&P futures on that news. And yes, I can still show it here in the virtual account. It won't show what's happening this moment, but we can see the jump in overnight futures right here. We saw this kind of sell-off right into the close and then past the close. So fair value is a little bit negative there, but, you can see this rip right here, and that is on that trade news. And then we had a little bit of data out of China that was a little bit better than expected, so that secondary rip was due to that. But since then, S&P futures, relatively stable overnight. This doesn't reflect where they are right now. They're up near their highs right now, or at least last I saw them. So, we are looking at about a 13 to 14 point open here on the S&P. After that move here in S&P futures overnight, that was with that catalyst. And we talked about the whys of the market going up on Monday, this kind of fund manager forced hand type element, the China U.S. China trade war element that is just become an absolute monster of a positive catalyst, and those kind of really driving things. And then that, trifecta there with, Fed speak, where, every time they open their mouth, they are saying something and, calming the market to the point now where, last night as I was kind of going through things, there was an article out, and I'll try to dig it up and post it on the feed later today. There was an article out talking about the bottoming of economic data. How economic data has now bottomed and is starting to point up, which is a really interesting argument considering most economic data, when you look at the chart of the economic data, it looks like this, right? This is what most of it looks like. That's not exactly a trough or a bottom or anything like that, and ultimately it could go like that, right? And this would be just kind of a little bit of a trough, but interesting arguments, being made out there to try to justify the rally. And, because it's not very justifiable from an economic data and an earnings standpoint, which almost all rallies are, this one just isn't very justifiable on that scope. So we're starting to hear a lot of justifications, for the market rally, but it is simple. It's not complicated as to the whys here. the whys in this market are relatively simple, and it's one of those where I wasn't expecting to see it play out this way. I expected a little more, turmoil, a little more chaos, and historically, when I'm looking at market moves, I'm looking at the metrics and I'm looking at the economics and the earnings. And at this time, at this rally, it's not really done me well. With this move, but the whys of the move, they're not very complicated. Here overall. So anyway, market set to gap up here this morning, and the trade from a bullish side is still going to be the same trade. Go buy whatever you want. Stop on the prior day's low, and as long as we're going to be in a chaser environment, that's the trade. Buy what you want, stop on the prior day's low. And, yes, you always have whipsaw potential. You always have, like what Adobe did yesterday, which, gap up, rip lower, pop back, probably going to hit a new short-term high here this morning. So there's going to be a little bit of that element, that starts to increase. But, overall, that is the trade. And if you're bearish and looking for a bear trade, you're waiting for at least, the prior day's lows to get broken. To kind of look and go, well, something's interesting, and there's just not much of that out there. There are some individual stocks and some things like a GameStop or whatnot that have news, and GameStop's going to collapse again here, and there's a stock headed for penny stock region, but there'll be small individual types of things, but en masse. Everything's about the same. Everything is about the same out there, in the market here today. Now, that brings up the challenge because I do have some puts on EEM. I do have some puts on Home Depot. Neither of them doing very well, right? In fact, I think the challenge is down to about $500 right here with those positions. Now, they are April expirations, so I do have 2.5 weeks. But they're running very short on time. And, the drop that I need in Home Depot is almost 10%. It's kind of ridiculous, to expect that big of a move in a short period of time. Though with Home Depot, we have seen, much bigger than that. So it's not, too out of the realm of possibility. But, I have to kind of decide, what do I want to do? Do I take that 500 and go and put it into something else? And, I looked yesterday, saying, if I pull that 500, I'm probably just going to go put it in a high-risk, high-reward option on the downside because there's more reward potential there. Not that the probabilities are there, but there's more reward potential there. So do I hold what I have and kind of ride with that? If I do, that's kind of boring. But at the same time, the way I have it kind of positioned here, if there is a big drop in the market, it's not like it's going to be missed with those two positions. So, it's one where I have to make a decision. And I've decided I'm going to hold and kind of see how the week plays out. Now, when I make a decision like that for the challenge, and I know I'm not going to be making a challenge trade for a few days, it can kind of, the challenge bogs down everything else, and hey, let's go trade type of thing. So I'm going to do what I've done, in the past in these types of situations, and I'll put out my top 3 to 5 trade setups that I see on the day, and I'll note which ones I'm trading personally. They're in that, and I'm going to try to put them into the message feed. I may jump on video to discuss a few of them here and there, but we'll be sharing those trade setups here each day as I kind of let these positions continue to play on out. So you will see that from me. Midday, 11 o'clock Mountain, 1 o'clock Eastern time period generally, but sometimes a little earlier, sometimes a little later, just depending on what's going on out there, in the marketplace. But you'll see those in the feed, and I will tag the ones that that I have traded or that I am getting involved in here as well, as I can't trade every setup that I see, nor do I want to. But overall, we'll be doing that here as as we go on forward. We do have the jobs report here this Friday, and we have a little bit more economic data, and then the market's going to go through a little bit of a lull, where it's probably going to be news driven, and then it will kind of go into that earnings season. And it's an earnings season as we kind of go into it, and as it is set up. It's one of those earnings seasons that you kind of look at and you go, well, is it Teflon? Is this one of those earnings seasons where companies can say whatever they want and the market's going to read whatever, bullish possibility is in there? And that's what it's looking like so far. I mean, when we look at the action on FedEx, when we look at the action on Micron, the action on Nike. I mean, Nike's report was pretty good. They got a pretty negative reaction there to it. They've been climbing on back, but this was one that was, priced a little bit differently than Micron, than FedEx going into earnings. It was priced for perfection. But it's going to be one of those, or it's going to be one of those earnings seasons where we could see some upside upside reactions significantly outweigh some downside reactions, unless there's a change in kind of this, change in kind of this chaser mentality, or this, hey, the Fed is the floor for the market, or hey, the U.S.-China trade deal will solve, everything globally, until one of those kind of rationales is eroded a little bit. The upside potential on stocks on their earnings report, I don't think can be underestimated. I don't think we're going to see a great earnings season. Meaning, I don't think we're going to look at companies and we're going to go, wow, this was such a great report here and a great report there, like we've been able to do, in past seasons. Yeah, we will have some really good reports out of some companies. Chipotle is going to report a dang good report. We're going to see a company like BHP Billiton, have a pretty solid report. They will have a pretty solid report. But this is one where I think we're going to see some pretty mediocre, and I think some stuff where the market's not going to care what the earnings and revenues are. They're going to care about the outlook going forward, and what they say about the outlook going forward, because that is where, that's kind of the variable in the market that's, the biggest unknown, and one that has that kind of magic pill associated to it, right now. Okay, all right. So anyway, that's kind of the plan going forward, and what I'm looking at here. And so we'll be jumping on, or we'll be sharing some of those setups. But as far as are you looking to buy this morning, or you want to chase in this morning? Look, I mean, chasers have been paid. Right, chasers have been paid. In most markets, chasers don't get paid. But this market, chasers continue to get paid. And what happens when chasers get paid? They continue to chase. And what happens when they continue to chase and get paid more? They continue to chase more. That's just kind of the nature of it. It becomes a snowball effect of chasing. When it ends very abruptly and very dramatically. But it's one of those things where there's no indication that it's over, that it's ended. Yeah, we do not see the market vibe rallying with the market here. We don't see the internals ticking up with the market here. One of the areas that is ticking up with the market is just this number of stocks trading above, a 7 and a 20-day moving average. In fact, we have 80% of the market trading above the 7, which is a very bullish number. So this is the part of the internals that is, the price action side of the internals is very solid, is very bullish. The rest of the internals, not so much, not so much. So very kind of interesting environment, complex in terms of, some of the undercurrents, but pretty simple in terms of the whys, that are out there right now. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.